the creditors, sorry, they're supposed to payable, the amount to the creditors is for 5,400. It means 5,400 is still due to, no, sorry, they paid during this year. They make the payment. So 5,400 they paid during this year, apart from what they have at the beginning of year and how much they left at the end of the year. So because the creditors are always treated as a liability, so this is a liability account, ledger account, where we start, liability is always entered in the credit side. So the opening balance will become this side on 1st of January. The opening liability creditors account payable was for 8,700, and during the year 5,400 cash was paid. After paying this cash is still 4,900 amount payable left over. So how much the credit purchase is? You add these two figures, 62,300. From that you subtract only opening stock, 8,700. So the balance you will get, this balance come from the credit sales, sorry, credit purchase, because they also buy during the year on credit, right? So that's how you will get the amount of credit purchase. Once you get the credit purchase, then you find out the total purchase by adding the cash purchase. The cash purchase are given in the question where is written cash payment, right? Cash payment. So cash purchase, then you add credit purchase and get the total purchase. Same thing for the debtors control account, we determine the credit sales. So we start with opening balance, which is in the question given 10,400. Then during the year, they received a cash of 78,200. 78,200. Then the closing balance is 9,600. So 9,600 you add and get the total balance. From there you subtract the opening balance, and then when you subtract 10,400 from the total, the credit sales will be 77,400. That's because that is the difference to make it total. So that's how we do that, right? Once you get the credit sales, then you add the credit sales and the cash sales to find out the total sales. Now, by adding the credit sales and cash sales, when you get the total sales, then you can start the statement of income. So we take this sales figure, 282,400. That figure you will write as a sales. Then from that, we subtract the cost of goods sold. The cost of goods sold is opening inventory. Then we write the total purchase, then minus closing inventory. Then the cost of goods sold is 143,900. Then from 143,900 we subtract from the sales to get the gross profit. So the gross profit of the year is 138,500. Then we add the commission. Commission, how much commissions are given? 4,500. 4,500. So the total income is become 143,000. From that we subtract the other expenses like wages, general expense, which is given as a cash payment. So the wages and general expense was 74,300 and outstanding expense 80. From where this 80 figure comes, if you go back to the question, you will see here outstanding expenses at the beginning of year is for 5,200 and at the end of the year is 600. So how much it is increase? Outstanding expenses 600 minus 520. Can you see? When you subtract, so that's how the wages, you will get this figure 80. Then the depreciation is charged 20% of the cost of motor delivery van. So the cost of delivery van is 68,000. Then you calculate the 20%, which is make 13,600. Then you list all these expenses. The total is 87,980. When you subtract 87,980, the net profit will be 55,020 pula. So that's how we calculate the net profit. After net profit, then we prepare the statement of affairs, statement of financial position, sorry. So we have the current like premises. The cost of premises is given in the question. $840,000. The cost of delivery van 68,000. So we'll write here 840,000. Then equipment. Do we have equipment? In the question? No, there is no equipment. So the cost of delivery van will be 68,000 minus 13,600. So 87, 4, 54,400. Is that right?
And we have equipment.
Where is the equipment?
4.6.
Okay, okay, right. Yeah, the cash payment. Yeah, they buy during this year the equipment, right? Okay, so we will also add the cost of equipment because they bought in this year, so there will be no depreciation on this. Okay, I was checking up, right. 4,600. Okay, so when you add 0.009, yeah, then it's fine. Okay, so this is our non-current asset. Okay, then we go for current asset. So the current assets are given as a closing inventory, trade, debtors. So how much is closing inventory? Value of closing inventory 14,200. Okay. Creditors 9,600. Okay, so it will go up. Yeah. And the cash in hand. You also need to check how much cash is available at the end of the year. So how we get the cash in hand or cash balance? The total cash received minus cash payment. So 295,000 is the cash received. From that, we subtract the cash payment, which is we make 236,700. You can see here, this is the amount of cash received and this is the amount of cash payment. So when you subtract these two figures, you will able to get, because receipts are more than the payment. So it means that end of the year, some cash is left. So how much cash is left? The cash is left 53,300. So when you add these three figures, 50, 60, 70, 82,100. So we add the current asset. So the total asset will be for the business the total asset for 981,100. Then from that we subtract the liabilities. So there are two liabilities. How much is trade creditor? How much is trade creditor? Let's see. Trade creditors is for 4,900 and the outstanding expenses is for 600. So 4,900 plus 600, 4,900, and the accrued is 600. So when you add, you will get net asset is 975,200. Then the capital at the beginning of year. The capital at the beginning of year, you will calculate uh, by using this formula. The total assets minus liabilities. So when you are adding the total asset, you will take the cost of premises, delivery van, account receivable, and the stock, and also the cash balance, 7,300 at the beginning. This much also cash was there at the beginning of the year when you are calculating the opening capital. So we add those figures, 8,400 plus 68. You will write, you will understand how we calculated 840,000 plus. Can you read someone the figures for me?
Can you please go over that again?
Okay, I'm saying that like we calculated in the statement of financial position, we calculated the net asset, is it? This net asset should be equal to the capital at the beginning of year, right? Capital at the end of the year. That's why we calculate like this in the statement of financial position. So to determine the capital, we need the opening capital, then we add the net profit and subtract the drawing to find out the capital at the end of the year. So opening capital, you use the same formula as we are using in the capital comparison method, right? So here we have the value of assets here. Then from there we subtract the liabilities. That's how we calculate the opening capital. So 84,000, 68,000, 10,400, 68, 10,400. Plus 1,400. Then we also add other assets, the current account receivable stock 12,300 and 12,300 and 7,300. 12,300 plus the opening balance of cash, right? Then from that we subtract minus, we subtract, what is this called? Liabilities at the beginning of the year. So you have two liabilities at the beginning of year, account creditors or account payable for 8,700 and 520. So we'll subtract 8,700 and 520. 8,700 plus 520. So when you add and subtract this one, how much you will get?
Eight, 7, 8.
Yeah, so it will be make 9. It means it's equal to 938,000. Then minus 520. 8, 9, 9, 220. So which is make here 946,180, right? Then you add the net profit. How much the net profit we calculated? 5520. So you add 55,020. So we add 55,020. So the total is become 1001, 200. Then from that we subtract the drawing. How much is drawing given? Drawing 8,200. So drawing is 8,200. Okay, when you subtract, then 8,000 minus 8,200. Y is 93. What are we missing?
Ma'am, it's not balancing.
Yeah, I can see that. That's what I'm thinking. What we are missing here. Let me
The fault is 8.
Huh?
Your fault is at the total of capital. It's 92878.
Is 928.
Yes, ma'am. 78.
780. How do we get it? Are we missing anything?
Ma'am, I think it's 938 minus 922.
Okay, okay. Just let me check again. Yes, thank you. 28, 780. Yeah. Then we add 15.02, which is make 983, 800 minus 8,200. Yeah. Now it's getting. Now it's 975,600. Yeah. So you can see that the value of net asset is equal to the closing capital, which is also 975,600. So that's how we prepare the account from the incomplete record by using the complete record method. Is that clear to everyone? So I hope you understand. Revise the method again so that you can see how we do that. Okay, so these are the activity for today's lesson. If you have anything else, you can ask